How much has this repo squeeze clouded the picture this week?
I don't think this is a big macroeconomic importance. I think this is more about the plumbing of the monetary system. It's something, the New York Fed needs to figure out how to handle a little bit of extra uncertainty, but I don't think it's of lasting macro consequence.
We do deserve some explanation, though, from Powell today on it, don't we?
Absolutely. The markets need to know this matters to the markets. They need to understand what's going on, how we can make sure it's dealt with differently in the future. But if I ask what the growth rate's going to be in the fourth quarter, where the unemployment rate's going to end the year, doesn't affect those things.
Jason, given the fact that it does seem to be, at least from a market perspective, a foregone conclusion that we're going to get some sort of rate cut here later today, what camp do you fall in? Do you think it's a hawkish cut, or do you think that we actually get some commentary that signals the Fed is more concerned about the economic outlook moving forward?
My own preference, and I'm going to bet that they do what I think is right, which is always a dangerous thing to do with the Fed, is that they end up in a neutral stance. They cut rates by 25 basis points, but they say, inflation's been a bit higher, wage growth has been a bit higher. They're going to need some material change in the data to cut rates again. That based on where we are now, where the data is right now, it's not that you should expect another cut is coming this year.
Steve, we saw crude oil spike up after those Saudi attacks over the weekend, and it's largely come back down. How key do you think that will be to the discussion from the Fed later today?
I thought you said Steve. Okay.
Steve,
I don't think that oil plays the role that it once did. Certainly not in the 70s, where we imported the vast bulk of the oil that we used back then. I don't think the Fed is going to be very concerned about inflation coming from higher oil prices. I think it's probably going to be more concerned about the uncertainty over what's going on in the Middle East. In fact, sort of picking up on what Jason was saying, the data does not well support a rate cut today. But the global outlook perhaps does. The trade war, the global economic weakness, fold in what's happening with oil in the Middle East right now. And you can make a case for a preemptive rate cut. The question is, can you make a case to say we're in the middle of an easing cycle here rather than this mid-cycle adjustment, which is what Goldman Sachs expects?
Jason, we've had a couple of business leaders, FedEx, of course, Fred Smith in their conference call yesterday, Randall Stevenson at an investment conference, CEO of AT&T, talking about their focus on business investment, the uncertainty that's been brought to bear, of course, by China, and even the free trade agreement with Mexico as well, and wondering when and if it creeps into the consumer side. Is it a concern to you as well, the continued lack of growth there or decline in business investment?
Yeah, I mean, you look at business investment, which fell in the last quarter. The pace of it over the last 6 quarters has slowed relative to what we saw before that. And there's no question that uncertainty is a big part of that. That's because businesses are forward-looking. As Steve said, the economy is quite good now in terms of where the unemployment rate is. Businesses are looking ahead as they're making their decisions. Consumers are looking backward. They're saying, do I have a job? Do I have a paycheck? At some point, this uncertainty will start to show up in the jobs numbers. It'll start to show up in the pay numbers. And then it could hit consumers, and that would be a much bigger deal for the economy if and when that happens.
Steve, how much firepower is there in another insurance cut or even a series of further insurance cuts from the Fed right now? I ask that because if consumers and businesses are feeling uncertain in this environment and are now expecting to see rates go lower and stay lower for longer, I wonder how much it can actually spur lending and just more economic activity in general.
I think you ask a good question. I don't know that there's very much in a quarter point. I actually think, Morgan, there's more negative in the Fed not doing something than there is positive in the Fed doing it. So the positive comes not almost, but very much from the Fed avoiding the negative outcomes that would happen if the market sold off here and if you got this sense that the Fed was not on top of what was happening in the markets here. So you'd also probably get a strengthening of the dollar. That could hurt exporters further. So I think there's more to be gained by the Fed doing this than there is to be lost by them not doing this. And I think ultimately, a quarter here, a quarter there, it's not going to make a big deal. Housing was good. I'm interested to know how much of housing today was a response to lower interest rates and lower mortgage rates. So that's the kind of positive you could possibly get from the economy through the interest rate sensitive sectors.
Finally, Jason, when you look at housing starts today, 12-year high, retail sales, IP 3 times the estimate, NAHB, I mean, have you been impressed with the macro as it's come in the last 2 weeks?
Yeah. Oh, I mean, the last 2 weeks have been good. In general, this is a very strong economy. You look at the macro data, it looks fine. It's just that the Fed's recalibrating around a different view of the neutral interest rate and worried about what might happen in the future. We haven't seen all the effects of the tariffs. We haven't seen all the effects of the global slowdown. I don't think oil will have a big impact on the economy, but who knows where it goes, who knows the impact. So I think this is all recalibration, forward-looking. I think that's a good thing. I just don't think we'll need to do much more of it after today, as long as the macro data holds up the way it has.